Let's get right to it. 2026 is shaping up to be a year of massive financial opportunity, and you don't want to miss out. 2026 could be your biggest chance to build wealth. The conditions are lining up for those who are ready to act decisively and take advantage of what's coming. The Federal Reserve is expected to cut interest rates, and that's a game changer. When rates drop, borrowing gets cheaper, spending and investing surge, and the economy heats up. This means businesses expand, jobs are created, and asset prices often rise, creating a ripple effect that benefits those who are prepared. The smart money is already moving, and you can get ahead by acting before the headlines hit. Rate cuts mean lower costs on loans and credit, more money flowing, and a boost for stocks and other assets. If you're thinking about investing, starting a business, or even buying property, these lower rates can make a huge difference in your returns. The key? Don't wait for the official announcement. Markets move on expectations. By positioning yourself now, you're setting up for gains before the crowd catches on. Understanding these cycles is how you protect and grow your wealth. The earlier you act, the more you stand to benefit from the coming wave. The upcoming cuts are a signal. A new phase is starting, and you want to be ready. This is your chance to get ahead of the curve and make moves that could pay off for years to come. Take action now, and you're not just preparing for next year, you're building a foundation for the future. Let's turn this news into your financial advantage. The decisions you make today could set you up for lasting wealth and security. Don't let this opportunity pass you by. 2026 could be your breakthrough year. Let's take a closer look at what history shows us when the Federal Reserve decides to cut interest rates. These decisions don't just make headlines, they send ripples through the entire financial system, affecting everything from currencies to commodities and stocks. Typically, the US dollar weakens after a rate cut. Lower rates mean less incentive for global investors to hold dollars, so the currency often loses value. This shift makes alternative assets, like gold and even foreign currencies, more attractive to investors seeking better returns or safety. Gold, in particular, tends to surge during these periods. Investors flock to it as a safe haven, especially when they're worried about inflation or economic uncertainty. We saw this play out dramatically in 2019 and 2020, when gold prices soared as rate cuts fueled demand. But perhaps the most dramatic impact is seen in the stock market. When borrowing becomes cheaper, it changes the game for businesses and investors alike. Companies can borrow at lower costs, which allows them to invest in growth, expand operations, and even buy back their own shares. All of these actions tend to drive stock prices higher, creating a more bullish market environment. Meanwhile, with savings accounts and bonds offering lower returns, everyday investors start searching for better opportunities. Many shift their money into stocks, hoping to capture higher gains, which adds even more fuel to the rally. After the 2019 rate cuts, for example, the S&P 500 didn't just rise, it soared to new highs. This is clear evidence that markets thrive on cheap money and investor optimism. Looking ahead to 2026, we expect a similar environment. If you're prepared and know where to look, you can position yourself to benefit from the next big wave in the markets. The signs are already emerging. Rate cuts tend to spark optimism, and the market often responds with lightning speed. Those who act quickly can capture the biggest gains. Don't wait for the headlines to confirm what's happening. The best opportunities go to those who position themselves early, before the crowd catches on. The opportunity is real, and the data backs it up. Now is the time to get ready, do your research, and prepare to take advantage of what could be the next major market rally. Timing is everything. December and January are your golden window. The December-January effect means markets are already strong, and anticipation of rate cuts adds fuel. Cheap money benefits stocks, tech, real estate, and even crypto. When borrowing is cheap, companies and riskier assets thrive. This is your chance to get in before the crowd. By spring, everyone will be talking about rate cuts. Act now to secure better prices. Build your positions calmly and methodically. Set the stage for growth before the rush begins. For the changes and opportunities that lie ahead. Stay sharp. Nothing is guaranteed. If inflation spikes, the Fed could hold or even raise rates, hitting stocks and risky assets hard. That's why your plan includes cash and gold for protection. Watch inflation reports and listen to Fed signals. Adapt if the outlook changes. Don't set and forget your portfolio. Stay engaged and informed. Being early is great, but staying flexible is key. The world can change fast. Commit to monitoring and adjusting as needed. Don't let fear stop you. Measured steps keep you ahead. Think like an investor. Balance risk and reward, and act with intention. 2026 is your opportunity. Take it, stay smart, and build your wealth.